to the second part of investments. Again, I'm joined by Susan. Yes. And I would like you to, in simple terms, define investments.
Wow. Investment is basically like putting money away or collecting your money together with an aim of making interest, with an aim of growing your capital. Investment is basically making your money work for you. We work hard every day to make money, but it's also a wise decision to have your money work for you. Like I know I have this amount of money that is put somewhere that once in a while maybe I get dividends, I get interest, and it helps you in your day-to-day life. Yeah, so investment is growing your money, so putting your money aside for growth. Capital appreciation, interest, but basically growth.
Okay. And what should you say are level investments available to average income earners?
Average income earners. By the way, I would say we are living in very interesting times because initially all we knew was like I would invest in a unit trust, like what we hear, money markets and all that, stocks. But now we have even apps apparently that you can just download and lock your money. Like I'm locking this money for this period. The interest may not be as much, but it gives you the aspect of saving. So somebody can do apps. By apps I mean something like M-Shwari. There's that GKCB and Pesa lock savings, those lock savings account, because actually lock for some time. And then we also have now the traditional modes of investment, unit trust, that have come as low. Like 7 years ago, I started the investment journey in it's been long, 7 years ago. By then, I remember like the minimum amount to invest was like I think $500,000. Then came down to 250,000. But today, you can invest in the same platform with as low as 100 shillings.
Wow.
Yes, like I can open a money market account. I can open another unit trust account, like a fixed income with 100 bob. Then you keep growing. So you see, it has come down, like to a level anyone can afford. Yes.
Okay. So to those who wait and say, "Oh, I will wait till I'm a millionaire to invest."
Yeah.
You can start with as low as
100 shillings. Yes.
Okay. My next point will be, how should my risk tolerance be when I'm about to invest or when I'm considering investment?
Now it depends on what you're looking at, because if your risk tolerance is not there, little or not there, something like stocks is not for you. Just go conservative, do treasury bills, bonds, something will give you low interest, but I'm assured of my capital is preserved. Risk tolerance also I would say goes with how much time do I have. Because again, if probably like a young person, you see, like when you're like in your 20s, 30s, we call that like you're in an accumulation phase. You can afford to take all the risk, but you cannot tell somebody who is retiring to take a risk. So how much time do you have? That also determines your risk tolerance. So what is my objective? How much time do I have to get to my goal? That is what determines my risk tolerance. Because I can say if I'm in my 20s, I can put this money in stocks for even maybe 10 years and see how it goes as I observe. But you cannot say the same of somebody who's worked for some time and is working towards retirement. So risk tolerance depends on the amount of time you have and what is my objective, what do I hope to achieve.
Okay. And how do I diversify my investments, and why should I?
It's important to diversify because actually, we grew up being told don't put all your eggs in one basket. Diversification gives you a variety, like of what the markets have to offer. Like if I can give an example on these times that we are in, I have seen people who had put their money like in real estate, and also had another account like with treasuries, money markets, which are like short-term instruments.
Yeah.
So like when the pandemic struck and now it's like real estate, you can't get your money, probably the companies are saying let's wait and see what happens.
Yes.
This particular person is able to move on with their daily lives because whatever you have in the short term investments, something like a money market fund, at least you can access.
Yes.
So when you diversify, you like balance. Is my fund account accessible? The liquidity element, like you balance between liquidity and growth. You need both. I need my money to grow and also need to be able to access my money when I need it. So diversification helps you like strike a balance. So that's the reason why you should diversify. And how, it's again dependent on what are you looking at. Like maybe I can say I have a project in 6 months and I have this money that I want to put in that project. Maybe like when somebody is planning to buy a car, buy land, or maybe you have taken a loan for a project, but it's not starting now. What do I do with that money? So how to diversify? I can put that money in a, say like a money market fund, or an account that will earn me money as I wait for my project to materialize. So how to diversify depends on what you're looking at, but options are there. Will I do a savings account? Do I lock this money in a fixed deposit account? So how depends on what you're looking at. But the reason to diversify is just to strike a balance.
Okay. So those people are bad because I believe most people just do it at one particular place.
Yes, mostly.
Money market.
Yes, you need to diversify because each particular investment has its own, it has its strengths and also weaknesses. So it's upon you to balance. What am I looking at? Again, if maybe say I am investing money, maybe to take my children to school. Probably I don't even have children now. So I have no business putting that money in money market, because the interest is this time. But I can afford to have it maybe fix it in a fixed deposit where the interest is higher, or maybe even link it to a real estate investment where the interest is higher and I can afford to look on it for a longer period of time. Yes.
And how does investment affect taxes?
Now, in this country, everyone is taxed. And actually, you're taxed on your return on the investment. But you'll find that people who do long-term investments, like pensions, the tax is less over a long period of time. But if I'm investing for a short time, you will attract the kawaida interest. The 15% withholding tax, but on the return. And if the company has paid for you, because the company, they normally, declare the taxes, then now as the investor, you're not taxed twice. So once the company has declared their interest, at least you save up on that. But initially, you'll find there are companies that probably didn't advise their clients well, or maybe we did not have that knowledge, but you find that a client would be taxed twice. Like the company declares, and I also now declare on my own. So you see that is like double tax.